Schwab Network. I'm Diane King Hall alongside Tom White. Time now for our Cash Tags segment. For that, we want to bring in our next guest. That's Andy Swan, co-founder of LikeFolio, taking a look at Airbnb. All right, Andy, thank you so much for joining us today. Airbnb has had, when you look at the stock, it's underperforming year to date. I guess that's the safe way to assess this, and on a year-over-year basis. What does your sentiment data show you now?
Yeah, it shows us that the market's got this right. We really do see Airbnb lagging peers and under pressure. You know, when we compare Airbnb versus, the direct competitor VRBO in terms of web visits, VRBO is still up, although not much, but Airbnb is down 8%, giving us a really kind of a spread there, a dichotomy between the two. And then overall, when we look at web visits to Airbnb, which are a great proxy for revenue in the future, those just continue trending downwards, even in some of the seasonally, high peak travel times, peak vacation planning times. So we just see Airbnb under pressure versus peers, versus the broader peers. When you start looking at hotels, et cetera, I feel like the novelty of Airbnb's worn off a little bit. The fees. They're trying to get out from under, some of that negative sentiment from the consumer side, but people just kind of grew tired of this. And we think that Airbnb has a long way to go before any sort of turnaround is complete. And until then, we continue to see the stock and the company being under just continuous pressure from peers and from investors that have grown tired of basically a no growth story.
Yeah, Andy, that turnaround compared to VRBO at this point, that's pretty spectacular. But, we always talk about this as really asset-light model that they have, really free cash flow. They're just a massive free cash flow generator. But you mentioned, I think, the key thing here and where the market's gotten it right is that consumer behavior has changed because travel hasn't pulled back at all. The hotel stocks are doing great, but consumer preferences have changed maybe from the fees that they had. Do you see that continuing in the future, even if travel continues to pick up, where they can't right the ship? They're going to have to do something drastic here, because I'm one of those people. I don't use Airbnb that much because I don't like it. I like hotels. I like nice hotels. So is that going to be the key, that they're going to need some time to turn this ship around?
Yeah, I think it is, and I think they have to figure out a little bit more of what they can offer. They're trying to do that. Management's put $200 million behind a push into services and experiences. Our data is very positive on that. I think that the initial rollout of that, where you can book a massage or, some sort of unique experience when you're on your trip that adds value to your trip and do it through one place. I think that's a really smart move, and they seem to be doing that well. So that's a good sign. But you're right. I think that the consumer in general has figured out that unless it's a place where they're going to have 8 people in a house and it's the only thing that's directly on the beach or directly on the stream that they want to be on, they prefer the hotel experience by and large. And the other thing I'll say that puts some pressure on Airbnb that I'm a little worried about is with the rising interest rates and low housing turnover, is that asset-light model becomes very much at risk when the owners of these properties are under interest rate pressure. A lot of them bought their Airbnbs on a variable rate note or mortgage that is now potentially cranking up and making these properties unprofitable. And so their asset-light model also has risks, and I think we're starting to see that in the pressure that the asset owners are facing that they rely on.
You make a great point there, Andy. I mean, and one of the things that stands out to me is that shift in consumer preferences, and Airbnb needs to figure out how to get consumers back. Because I was one who actually used to like Airbnb. I thought, it was a neat experience until I didn't like it anymore because there's inconsistency, and that's one of the challenges, inconsistency in hosts, right? You'll have some great hosts, some super hosts, and then you have a host where all night long you have mangoes dropping on the roof of where you're staying, which mangoes are nice to eat, but you don't want to hear them off all night. Personal experience there. And then you have all the fees, like you mentioned. So that starts to become a turnoff because it's like, what are you gaining? And Swan, to your point, I feel like I'm making the argument here as I'm speaking. VRBO is in some markets where Airbnb exists, where you don't have access to all the hotels. So does Airbnb need to lean more into, from the data that you all had, into those unique markets where you don't have the hotel penetration, or does it need to streamline, given like what Tom mentioned about, I mean, it's an asset-light portfolio, but does it need to streamline to some degree, just become a smaller version of itself?
Yeah, I think there's two diverging paths. It's pretty clear to us they're, streamlining isn't, they haven't given up on the growth story. And so I think an investor in Airbnb has to understand that no matter what we might say they should do, we don't see Airbnb as anytime soon saying we're going to be a smaller version of ourselves or we're going to streamline. It's, the push into services and experiences is what tells us that. And so I do think that they're doing a good job of understanding their customer better. I think that they were late in doing so, and it really cost them. It cost them, customers like Diane, like Tom, like Andy, who used to love the Airbnb experience when it was a little bit of a novelty and wasn't so heavy feeling to deal with. But so now they understand that they've lost us, and they probably understand how to get us back with some unique experiences, unique locations, and really highlighting those things. But it's just going to take time, and they're going to have to execute very, very well to pull it off because competition is very, very strong. And so that's where Airbnb is. That's what investors have to understand, that they're getting. That's the fight that they're getting into when they own a part of this company.
Andy, real quick here, they're all about scale, and that's the big thing with them. As they were growing scale during the pandemic and after the pandemic, and now it's starting to turn down, that's where their growth prospects start to dry up a little bit because they need more hosts, and hosts right now with interest rates this high can't do that. So is that also probably what's going to keep a lid on this stock is the fact that, hey, if they can't expand their footprint more, that's going to actually start hurting those growth rates, and that's going to maybe hurt the stock.
Yeah, and even worse than that, at LikeFolio, we do track some of the quantifiable metrics around the host community as well. And the complaints are growing that this is just really not as profitable or really not as easy as I thought. And that without some of these, exorbitant fees, I can't pencil this property to be a profitable Airbnb property. And so if you get that sentiment growing in that community and people start turning to other ways to monetize these homes that they have or are forced to offload them, you could actually see the footprint shrink just as quickly as it grew. That's part of the problem with the asset-light model and why we're seeing the risk side of that model start to take hold a little bit here.
All right, thank you, Andy. That's Andy Swan, co-founder of LikeFolio. Appreciate you bringing out the latest sentiment data on Airbnb. Now for the trading perspective on